for all your tax needs and more. Later CPA is the one you adore. Later.
Hi there. I'm Daniel Later, founder of Later CPA and Associates, and welcome to our new ongoing series, Tax Strategy, right here, right now, where we are talking about great ways to reduce your tax bill and skipping all the jargon. So today's tax topic is going to be the home office deduction, done correctly. Our goal for today is to help you take the home office deduction safely and correctly, maximize the tax benefit without getting sloppy, and keep it simple enough to explain and document. Now, why does this matter from a tax strategy perspective? Well, it turns part of your home costs into a legitimate business deduction. It will lower your taxable income and sometimes improve the overall tax planning choices you have in front of you. It also creates a cleaner support for related deductions like your internet, phone, mileage, admin time, etc. So let's dive into it. Now, there are two gatekeeper rules that apply to a home office. These are not negotiable. First, the space has to be a regular use for your business and not just a once-in-a-while activity. Second, it needs to be an exclusive use area. So this space is dedicated to your business. This is not a shared guest room, not the kitchen table, not the couch in front of the TV. No, it has to be a dedicated space for that. The home office, it needs to also be the principal place of your business. Now, what does that mean? It means you're doing some core business activities here. Your scheduling, your billing, your notes, emailing, marketing, admin, bookkeeping, etc. All the activities that help you run your business. Do those in your home office. Now, you can have a home office. You can also see clients elsewhere. You can have a rented office that you sit down and see clients with. You can have multiple rented offices. I sometimes see that. And you can still have the home office deduction. Remember those rules for the home office and it can still qualify. Now, there's two methods for claiming the home office deduction. These are methods we usually look at as we're preparing a tax return to make sure we're choosing the better of the two methods. The first is the simplified method. This is the easy one. It's less paperwork, and it's often the best when the home office is just a small area or the house's costs are low. What you'll do is you'll take the square footage of the office and you'll multiply it by the rate the IRS has given. I believe it's $5 for every square foot right now. The actual method, the second way of doing this usually gives us a larger deduction. Now, what this requires is that you're tracking the expenses that will go into the home office. These are things like interest on the mortgage you pay, your real estate taxes, your insurance on your home, utilities, repairs, etc. All those expenses, you'll have to track them. To take this method, you'll take a measurement of the square footage of your office and a measurement of the square footage of your entire home. And you'll take that percentage of the office compared to home, and that's the percentage you apply to those costs. Now, that's the actual method. It usually creates a bigger, better home office deduction, but sometimes if you're in a situation where your home costs are low, the simplified method can be a better option. Now, the best strategy, like I said, is to look at both methods and pick the better one. Now, it's important you are measuring the space of your home office. We're looking at square feet. Keep in mind that an office that's 10 foot by 10 foot, that's 100 square feet. Now, that might seem small if your home is a 2,000 square foot house, but that's the way it works. We have to measure by the square foot. Now, some great ideas, some strategy and methods that will help you to prevent or to answer future audits. Have proof of your home office. Make a floor plan sketch, take photos of the area, note the measurements when you take those, just so there's a record. Now, there's a lot of expenses that can count in the actual method, as we said. So we're going to talk a little bit more about more of them. Now, remember, without a home office, a lot of these expenses are not deductible anywhere on your tax return. They could be considered a lost tax deduction. When we take them on a home office, we can claim them. Some of the items that we can claim on a home office that normally we cannot claim are rent, if you're renting your place. And if you own it, mortgage interest, which is deductible otherwise, but still, your rent, that is not deductible unless you have a home office. Utilities, same thing, not deductible without a home office. Your insurance, your HOA fees, general repairs and maintenance. Remember to allocate those by the percentages of the home office that we talked about earlier. Now, sometimes you have direct office only costs. These are cool. This is a cost that goes directly to your home office and you can take the full amount. Some examples are when you need to paint that room. Or, I saw this once and it was a great deduction. Someone needed to remodel a spare bedroom to have plumbing for a hair salon. The entire thing was deductible because it related to that home office, that hair salon. So keep that in mind. Sometimes your costs are 100% attributed just to the office. Talk with your tax professional if you need some guidance on that part. Now, your internet, your phone strategy, this can be combined with your home office deductions so that it makes reasonable sense and it's easier to track. And remember, our goal with home office or any home expenses that we want to include as part of the business, the goal is to be defensible, not aggressive. Don't be aggressive on your tax returns. That's when we see red flags and get IRS notices. A couple of special notes on taking your home office deduction. The first, depreciation. When you use the actual method, remember measuring the square footage of the home and taking the expenses that go into your home, we can often include depreciation into that calculation. However, and remember this, when you later sell that home, depreciation can later come back to kick you a little bit. It's called recapture. It's not something I'm going to go into here, but it is something to remember in the future if you take depreciation as part of your home office deduction. Now, a couple strategy moves. At this point, treat this like a planning decision, not an automatic yes. We have options with the home office. And consider how long you plan to stay in the home and the bigger tax picture for you. Now, there's a couple common mistakes, and let's tell you how to avoid them. First, claiming a space that is not exclusive, like the couch in front of the TV or the kitchen table. Those are not exclusive business areas, clearly. The fix is to make your area a truly business-only area. If you've got a spare bedroom, that's perfect. If you've got a corner in a room that you can dedicate to business, that can work too. It does not have to be an enclosed room. It can be an area. Now, if you're just estimating your square footage, don't do that. Actually measure it. If you need assistance with that, get a tape measure. Lay it on the floor, measure your walls. Most offices are a square or a rectangle or something like that. Just measure it out. Another mistake, do not take 100% of the utilities or internet without support. The fix for this is just use that percentage based on the square feet. Another error is not to have any documentation. Now, this one's a big one. How do you support yourself against an audit if you don't have any documentation? So, take pictures, record the square footage, etc. The things we mentioned earlier. It is okay to have these in a digital format. Just keep them. Now, there's a couple things on a checklist to make your home office more audit-proof. First, again, take the measurements. Write them down. Know what your business use percentage is and have it documented. Take a few photos of the business area of your office. Keep utility and internet statements, and you can save these as a PDF, that's fine, but keep those records so that we can see where those numbers are coming from. Same thing with your rent or mortgage interest documents. Also keep records or notes about any office-only repairs or upgrades or receipts or invoices from a contractor, etc. Keep those records just the same as you would for your own business. Now, the bottom line, the home office deduction, it is a real deduction for real business use. Now, the strategy for the home office is accuracy and documentation, and not stretching the rules, not estimating or wiggling. If you can explain it clearly, then you're usually in a good shape. Now, critical thinking question for you. If someone asked you to prove your home office deduction in 2 minutes, what would you show them? And what's one thing you should tighten up this week? Next week, we are going to be talking about accountable plans for reimbursements, for home offices, phone, internet, mileage, etc. We are talking about it. So don't forget to like, follow, subscribe for any future events and the tax advice we give. Visit our website, latercpa.com. And remember, have a great weekend. Keep helping others to help themselves, and let us help you to do just that. I'll see you next time. Bye.